Hi, everybody. It's Gil. It's Monday after the close on May 9th. And I'm sure some people are seeing stocks all over the place. To us right now, what you've got going on is, the NASDAQ came out here. We're looking at a daily chart of the NASDAQ. Can everybody see my charts okay? Just give me a yes there, please. Very good. Okay, so you can see here what we've got going on is basically just NASDAQ came out, and through this area here, get a breakout, and you pulled right back on top of this area, right above the 2,800 level. So you're basically trying to find support, but you come down here. What I thought was interesting is last Monday we had the Osama bin killed reaction rally in the morning with the futures gapping up pretty hugely. But you can see here, this is Monday last week, so a week ago today. You gapped up big and you reversed to close down. Volume is above average, but not a lot heavier. And then you come down for a couple days and you bounce off this 2,800 area and this trend line breakout area here. But notice how Friday, where you had a strong jobs number supposedly, but it's all birth death adjustment, and it's all basically 175,000 jobs added out of thin air just on a birth death adjustment. So it's all just kind of moving the seashells around in a big shell game when it comes to reporting the jobs numbers. So the market rallies initially, and it's basically another example of the smart money handing off to the dumb money, just like they did on Monday on the Osama bin killed news. And so on Friday we get the same thing, another news rally that it looks to us like smart money sells into. So we actually got a sell signal on Friday on that basis. I think it was the day before, on Thursday actually. Dr. K is actually in from London. He's in Beverly Hills right now, but he's having some internet issues. Hopefully he'll be able to get on in a little bit. But basically what you have now is a sell signal on a model, and that's fine. It doesn't mean that the market's going to break down immediately right after you get a sell signal. And certainly it's not a day trading signal where you're going to be making profits in one day or right away. A lot of times a sell signal will be issued and then no other signal will show up, and then you'll start to see things roll over. But today what we had is a low volume bounce, and so personally Dr. K and I haven't done anything since we bailed out of silver a couple of weeks ago. We're fat and happy for the year, and so we're sitting in cash mostly and hanging out. Now today I started to put out the SQQQ into this rally on the basis of the sell signal. I did that with one of my accounts. But I'm really only playing with about 20% of my money right now. I have several other accounts that I'm not doing anything with after the silver thing. So we're just kind of hanging out here. And to a large extent, it seems like there isn't a lot to be trying to do that's new here. And if you're trying to enter the market here, I think you're not really in a high probability zone given the positions of some of the leaders. So you really want to be cautious here. Our tact has been to just lay back and not trying to do anything or force anything here, although on the basis of the sell signal, we'll put out the SQQQ. And I would also note that if you're going to act on the model, then the one thing you need to do is kind of look at where you are when the signal is issued. Dr. K pointed out when the alert was sent out that you're still in a QE environment, and if you come down and issue a sell signal, you get a sell signal. Remember, this is objective pretty much. So you just get a sell signal issued right at the support level. It's logical that it would bounce off, but notice you've had chances to use these rallies to put out positions in an inverse ETF if you wanted to. So that's really kind of what you're dealing with. So we'll see if this breaks down, but for the most part we feel like you're kind of in no man's land. You might pop around. You could be going back and forth for a period of time until you actually start to see some sort of trend develop. So we could be in a trendless period. We don't know for sure, and we'll just have to see how this thing pans out. But a lot of the action in the stocks is somewhat uneven. Dr. K, are you there? I hear somebody back there, but not sure. He's been having some internet issues. So in any case, I'm just going to continue here. Now the big story, of course, has been the SLV. He says he can hear me. I can't hear him. So something else I should warn everybody about is that they are beefing up the alarm system at the house here, and so I've got the guys working at the house, and occasionally you may hear some beeps in the background, but that's just the system being tested out. So meanwhile, The big story has been in silver, and I think it's interesting. We do get some emails, people, please tell me when it's time to get back into silver. Well, why? Okay, that's what I want to know. Silver had its move. You had a big climax top on the SLB. You have this big move back into new highs. We actually sold in here on the AGQ, which is where the silver futures actually found their peak. So you see that happening here. There's actually the peak was hit on that day, but notice how if I hold here, you can see that on this day, silver actually went higher. The SLV, the ETF went higher. It kind of shows you that a lot of people are trying to rush into the metal at this point. And it's very interesting that people are so enamored with this move, and it just, to me, it's typical in classic investor psychology, wrong way psychology. Now everybody's really excited about where do I get back into silver, when really you should have been into it somewhere in this rally, and now that it's over, it's over. Okay, the idea that this is going to shoot back to new highs is probably very remote, and I think if that happened, it would mean that something very serious is going on in the economy or in the global financial system, or something somewhere is coming unhinged if you were to suddenly see the metals take off. So what we know is that you're probably going to have to spend some time going sideways. So if you were in this move, and hopefully you got out when we said to get it out, and there was a climax top, we were pretty forthright about that coming out of the emails at that time, and you're gone, and you're not trying to play this, because even trying to buy it at the 50-day, you gap down below it, it's like catching a falling knife. It's almost impossible to do. And then finally you do get this reaction rally. Goldman overnight comes out and says that commodities might be a buy now. Don't forget, these are the guys who told us that commodities were a sell when silver was right here, right around the 40 level, and that actually set up a little short-term buying opportunity for you before it took off on this climactic run here. So Goldman comes in and now tells you that these are a buy. Okay, so it starts a rally off, running up to the 50-day line here. I'm not that convinced that this is the beginning of a whole new bull move in silver. I think you got a lot of overhead to work off, and I think it's going to take some time for this to settle down and set up again, and it may be several months. So I don't anticipate that we're going to see silver launching anytime soon. So let's see. I'm looking to see if Dr. K is there. He claims he can hear me. I can't hear him. Dr. K, are you there? I am me if you can hear me, because we can't hear you. Nope, nobody can hear you. He can hear us, though. Okay, so you're going to have to listen to my presentation, Dr. K. If you don't like what I'm saying, you got something to say, you can I am me, and we can go from there. Okay, we'll work it that way. But it's kind of ironic that in Beverly Hills, one of the wealthiest neighborhoods in the country, if not the world, you've got lousy internet service. So AT&T, thank you very much. Short that stock. There you go. It's looking like it wants to stay up, but I don't know. This is pretty pathetic, I think, if Beverly Hills has that kind of internet service. Anyways, let's get back to some of this. The same thing with gold. Gold only came off about 5-6% off its peak, 7%, and it gets another bounce. But it finds support at the 50-day. Maybe gold is going to do better than silver. It may drag silver up with it if it tries to come out of here, but this is a little more reasonable, and maybe it's back and forth. But I would only be trying to buy gold or any of these things off of a logical area. Silver I would leave alone because of the post-climax top position that you're in, and this real decline. And gold you're seeing on a 2-day, couple of gap ups here on the GLD. It's still going to need to probably work out and base a little bit. Meanwhile, you look at stuff like oil has come down pretty hard, and you look at the DDC, same thing there. So none of these held, and so I don't think you really want to be jumping right back in and necessarily going to take off to new highs. The thing that you got going on that's really putting some pressure on the commodities has been the dollar rally. And so that's going to continue, and you come right up towards the 50-day, but you pull back a little bit. This might continue higher here, and that was one of the things I've been looking for, we've been looking for recently as this comes down to these lows here. Now, if you look at the dollar index, this is actually at a low that you haven't seen for a long time. So let's take a look. Let me actually come in here because all that volume is actually wrong there. Let's go with the dollar here. Not DXA 0. So come up. Here's a daily chart of dollar, the dollar index, and here's the weekly here. Now, if we look at long term, we haven't seen. You've undercut this low here. Now, if we keep going back, you've undercut these lows, and you haven't seen lows like that for a long time. So basically, if we do a long-term view of the dollar here, going back to 2000, actually before that 98, you can see that you're near low, so you're really at a critical point. So now you're rallying up into this area, which might be resistance. So we'll really have to see where this goes. But I'm thinking that the potential for governments, sovereigns around the world to want to support the dollar because their own currencies going up as much as they are is not something they want to see. It makes their exports less competitive. So I would think that you may see some sort of action. So far, we're seeing a reaction bounce. Now, if you can get through this resistance level at around somewhere in here around 85 on the U.S. dollar index, then maybe you've got something going on in here. But for now, you've got a long ways to go before you're going to get there. So you might see this. This could actually get you a nice reaction rally a lot further up from here. So we'll just have to see. But right in the SLB and gold and the way the DBC has been coming off, I think you got some issues here that you're going to have to deal with. Anyways, let's see. Somebody calling me bunker hunt. We're all said yes. We cornered the silver market and then unloaded right at the top. Unlike the bunker, the brothers, the Hunt brothers, who got involved in cornering the market, they were actually long silver and got hammered when the thing broke. So we actually sold into the top there. So a couple of things here we're going to go over. Let's look at now. What are we looking for in terms of a you would actually be, this would be 2 days of a rally attempt right now. So somebody's asking, when would you need to see Apollo today? Not for at least 2 more days, if that's actually going to happen. The light volume rally off the support level at around 2,800 looks like it might be giving it up here. So we'll actually see over the next couple of days. And I just want to go through some of the stocks here pretty quickly. Some of the things that have been holding up pretty well. Apple has been one stock, surprisingly enough, that's holding up pretty well. Let's pull this thing up here. And you notice here that the stock is holding. The 50-day moving average is the blue line here. So your volume's been drawing up. It's holding in pretty tight. And if you look at it on the weekly chart, let's see here. You actually see you're holding in pretty tight in this little flag. The other thing here is you have 1, 2, 3 waves to the downside. So if we saw the market rally, my guess is you might see Apple try to rally as well and be one of the stocks that carries the rally. Other stock that's doing pretty well here is Amazon. Citigroup came out today and upgraded the stock and raised the price target to 240. So you didn't get that much volume on it. It's trying to get through the 200 level, but it's in this little flag. You got resistance through here. So those are 2 of the names that have been acting okay. Other than that, you're not seeing too much going on, primarily because you're seeing stocks bounce off their lows. Now, MCP, Molycorp, comes out with earnings tomorrow. They're looking for 10 cents a share. Stock undercut today and undercut this low here. So you see how it undercuts the low and it looks like it's going to head for the 50-day moving average down here, but it actually flips around back to the upside. Now, this is in a position here where unless you own it way down here on this pocket pivot and you're holding into earnings tomorrow after the close and you want to scale your position so that if it does drop 10, 15% after earnings, then you're not going to get hurt too badly, or you're properly weighted in your position. So in other words, a 10% position drops 10%, it's going to cost you 1% to your portfolio. 20% position is going to cost you 2%, and you can kind of figure it out that way. So for us, 2-3% hit to our portfolio is really kind of a day's, not even a day's fluctuation. Sometimes just an hour's fluctuation. But in any case, that's a pretty classic move where it undercuts a low, a key low, and tries to rally back up. But at this point, we're just waiting to see what the earnings come out with tomorrow, and you're looking for 10 cents a share. Now, one thing I think is interesting is that in 2013, Molycorp is supposed to earn over $9 a share. So really, right now, according to 2013 numbers, you're looking at a stock selling about 8 times estimates. I was actually on Chicago radio today, WBBM, CBS affiliate, and mentioned Molycorp as a stock to keep an eye on, and of course, they poo-pooed it the way my silver pick was poo-pooed back in September of last year, which is essentially, it's too high. So MCP is it too high? Well, I don't know. It's only at 8 times 2013 estimates, so it might be okay. But it's one of the few things that's been acting okay. Green Mountain came out, and of course, you had a big gap up. The one thing here, though, is by the time you get to the second gap up, it's a little bit obvious. So you break down and undercut the low of the gap up day. Now you come back up. You had some pretty good volume yesterday, but you're extended from the 10-day moving average here, okay? So this would not be a valid pocket pivot. So not really something to be buying into right now unless you're going to come back and try to play this as if it was a gap up that never broke the low of the gap up day. So you drop below 75. And remember, the rule for buying a gap up day is that the volume has to be 150% above average. So here you can see that's quite clear there that you have it, but it also should hold the intraday low of the gap up day, which it doesn't. So it does float around. But remember, this is the second one you've seen in about 2 months in Green Mountain Coffee, and so I don't think that it's necessarily a secret here, and this may be more of an exhaustion gap given the fact that it's already had 1, 2, 3 gap ups in just, say, the last 3.5 months. So kind of obvious, but it's holding up. So you got to decide what you're going to use for your stop. You can't use the 10-day because it tends to violate the 10-day. If you use a 50-day, you're coming all the way down. Probably by the time this meets and catches up, you're probably coming into 65, 66. So, but if you're up on the stop, you could try and hold on to it, but maybe use a stop, around one of these lows here, thinking that it should hold this gap, or try to. So, a tough situation to be in if you own it from before because you got some nice profits, but it's a problem I'm sure a lot of people wouldn't mind having right now. So other stocks are looking pretty good. Estée Lauder, surprisingly enough, has a pocket pivot here and a pocket pivot here and then a pocket pivot here. So 3 in a row, and it's moving to new highs. Cosmetics company, but another one that's been moving along with that has been Ulta Salon. So that group for some reason is strong. I don't know. People buying makeup, I have no idea what that's all about. Let's see. Let's run through some of these, some of our questions. Rax came out with earnings, and let's see. After hours, stock's down about $1. Yeah, this stock tried to break out. You were in a 3 weeks tight pattern here. You gapped out here on some reasonable volume. You ran up a little bit, and then you pulled back, found support just above the 50-day, and now you're just kind of hanging around above the 50-day. Long-term, RAX tends to hold the 50-day moving average. You can see here it closes below but does not violate because it moves back above it the next day rather than going below the low of the day where you close below the 50-day. So remember, one close below doesn't count as a violation. It must move below the low of that first closing day, below the 50-day. So here's another example. Holds the 50-day, holds it here, and so now you're coming in. So if you're long this stock from way down below or the lower price, you probably want to be using the 50-day moving average as your guide for the stop. Another stock that people have asked whether it's a climax top. We don't really think so, but if anything, it's going to need some time to build a base probably. You've had some heavy selling in the stock, and it may need to go sideways. It's not really clear to us whether this is a climax top. It doesn't strike us as being that climactic just because of the acceleration. It's just not. It's a little different from silver if you look at silver. So, but it's possible that it could be just a top. We don't know for sure, but you have come off of the peak in Cena, and you're about 15% off of the highs. Now, your typical growth stock is going to correct anywhere from 15 to 30%, 35% off the peak when it builds a new base. So it's possible Cena could come down lower. But you look at some of the other Chinese internets, which we're leading, and Sohu just kind of crapped out on us and broke down below its breakout point here. Of course, last week I called this stock a migraine stock, the way it acts, runs up, runs in, runs up again, breaks down. And then finally, NetEase, which was doing real well up here until recently now, is broken below its 50-day. Now you get this sort of wedging rally, not really wedging rally, but a weak volume rally up into the towards the 50-day. So it kind of stalls out today. Maybe it's going to roll over again. I wouldn't necessarily short this position or short this pattern here. A lot of times I've seen stocks continue to drift higher, and they don't really break down. It's probably too early in the pattern anyway. So and also I think it's a little bit too early to really start to go a full bore or full speed ahead on the short side today. So Baidu has held up a little bit better. You get the obvious bounce off the 50-day moving average, but you notice here volume's declining as this price is trying to rise here, so it's a little bit wedgy. It may need some more time to build a base, and maybe it works along the 50-day moving average. But if you own the stock from down here, you could try and hold it and use the 50-day moving average as your guide to sell the stock, since it does tend to follow that and has done so for about the last, well, almost over 3.5 months, it looks like to me. So that's acting okay. Other stocks that we've been keeping an eye on here, let's see, Broadsoft. This is to me just an example of a junky little tech stock. It doesn't trade that much volume. Look at the pattern; it's very volatile. You get some pocket pivots here. Here is one, but today you get a big volume reversal. There's really not much to think about this other than the fact that that doesn't look very good from a technical perspective. So no massaging of opinions is going to suddenly make that positive action. So big volume reversal like that, looks kind of doggy to me, if you ask me. So I'm not playing in that. And like I said, we're not really playing in a lot of these situations. We're basically sitting in cash. I got a little test position in the SQQQ, which is the, I believe it's the 2 times or the 3 times, I believe. The Ultra Pro short, the Qs. So I think it's 2x or 3x. Dr. K, can you IM me if you can hear me? Is that a 2x or a 3x on the SQQQ? If you're still there. Maybe his internet completely fritzed out. He's not responding. No response. But in any case, so that's really all we're doing right now is dealing with that. Now some other stocks. I'm just going to go down my list here. Medical, I noticed 5 out of the 7 top groups today, right now, at this point in time. 5 of the top 7 industry groups are medical groups. And of course, biomed, biotech, stocks like Biogen have been the leaders, and I think you've seen some of these others. CPHE trying to hold on, Biopharm, and kind of breaking down, not looking so hot. You see this Momenta Pharmaceuticals has been trying to come back up. But that's been your number 1 group. And I don't know if that's telling you got more of a defensive type lever, because often biotechs will live in their own little world during a weak market environment. So it's interesting, though, that 5 out of the 7 top groups right now in the market are medical-related stocks. So some other stocks that are hanging in there pretty good. Tiffany has been holding up. If you recall, a few weeks ago I mentioned you have pocket pivot in here. This was actually the pocket pivot, and then followed up with a second one coming up through the 10-day moving average, and stocks continuing to move higher. Tiffany, of course, jewelry. I guess higher-end retailers tend to hold up better, like Coach, Fossil. These stocks are holding up pretty well, reasonably well. And I think in a weak economy, that's simply because wealthier people don't really stop shopping. So Netflix today, there are some, or actually over the weekend, there was some talk of Amazon buying Netflix. I think it's more speculation than anything. So of course the stock gets a little lift from here back above the 10-day moving average, but note the volume is pretty light. So you're not really seeing anything that would really get us excited. You got a high volume gap down and break here, and you really haven't seen any volume come in off of the 50-day. And in fact, if you look at the pattern, buying volume has diminished, but then so has selling volume. Now the one thing about Netflix, you've got a huge amount of shorts in the stock. So right now we're looking at, well, it's actually dropped down quite a bit. You have about a little over 11 million shares sold short on a 48 million share float. So that's about 20%, a little more than that. And that probably puts a floor in here. And so far we've noticed it's holding the 50-day. But you had this breakout and it failed. It's a late stage pattern. It doesn't necessarily mean it's going to fall apart. Maybe it just needs more time to build another base. But we'll see. But for now, I would think that if you do break the 50-day moving average and the volume picks up pretty seriously, you may have an issue there. So I would just be vigilant with that. So let's look at some of the cloud stocks. Clouds are looking like they wanted to come back. F5, on the portfolio simulator, and we try to pretend we're writing some sort of a sitcom, with the portfolio simulator. Looks like we got some news on RIX again. Let's see what the follow-up is. Is it doing anything to the price? Not really. Anyway, getting back to what I was trying to talk about. F5, the portfolio simulator, the guy said, our portfolio simulator said a 102.77 stop, and he said put in a stop limit order. So when it goes off, when it hits that price, your order is triggered. And of course, he got filled high, but that's why, that's what's going to happen with a stop limit order. Now, in hindsight, stock closed today at 103.37, so just being stopped out right away tells you that maybe the thing isn't going to work. You do have this gap that you filled, and maybe it needs more time before it does roll over, but I would say more than anything, and if you read the article that Dr. K and I wrote in Technical Analysis of Stocks and Commodities magazine, where we talk about market context in a variety of scenarios, but in particular relevant to what I'm talking about here, is market context within the realm of short selling. And the one thing that I've found in my studies of short sale setups that work is that the stocks tend to start to mimic the market. So the market will actually weaken and start to show some rolling patterns, as it's rolling over, and the stock, a particular leader that's starting to break down, will also start to mimic that. I mean, if you go back and you look at Crocs in 2007, when it topped, it actually topped with the market in October of 2007, and it built its head and shoulders almost in synchrony with the NASDAQ at the time. So that's actually, I want to look at a weekly chart, and if you go back here, now here's the head and shoulders. I want you to imprint this on your brain here. There's your left shoulder, and there's the classic head, the big break, a huge volume that defines the right side of the head, and then a right shoulder here. Now notice between, say, middle of July through the end of the year, okay, in 2008, Crocs forms a head and shoulders. Now let's look at this. Whoops. All right. What the heck? I know what's going on here. There we go. Okay, so let's go back to 2007. And what's really interesting, there it is, okay? So here we have 2007 from the middle of July through the end of the year. Notice how the market sets up in a head and shoulders type of formation too, and it's very similar to what Crocs was doing. And when Crocs broke down here, the market also broke down. So if you're looking at shorting any of these stocks that we've been talking about, and the F5 was a suggestion, really didn't pan out, and I'm not really so sure I would be trying to short it here. I don't think that it's really set up just yet. You're going to have to see some kind of a downside rollover here with some volume picking up. And one thing you have to keep in mind too is if you were to short this thing that did break, your lows along here are likely going to provide some sort of support so that maybe it undercuts and hits bounces off of, say, 90 or something. So you might be able to get 10% or a little more off of a downside move if it breaks. But right now it doesn't look to me like that's what it wants to do. The overall pattern in F5, and I've marked this up many times, it looks very similar to that Crocs pattern in 2007, right? You get a big head and shoulders. But so far it hasn't broken the neckline, and probably it won't until you see the market start to break some support area. So the key here on the short side is going to be looking to see what the market does and synchronizing short sales with a breakdown in the market. And right now, that's not really clear because F5's pattern doesn't look anything like the market right now. And so the market would need to break down here, I think, and maybe set up sometime later and I don't really see it happening anytime soon. So that's kind of where I'm at with these on the short side. The CRM, you might notice if you look at Apple's pattern real quick, you look at that. Okay, now look at that. Now look at CRM. Let's go back to CRM here. Okay, now notice it has similar properties in that it has 1, 2, 3 sell-offs within the base. So using the rule of 3, this tends to create a low, at least a temporary low, and you see that CRM is trying to get back, or it's holding the 50-day moving average. It had that nice move up to 140, but that was resistance up here, and now it's trying to hold the 50-day here, and so far so good. But earnings come out, I think, next week, and that's obviously going to be the critical factor in whether this stock continues higher or whether it rolls over. But it's interesting to note that it is looking like Apple 1, 2, 3 sell-offs within the pattern, then it moves tight over the last 3 weeks, 4 weeks, holding above the 50-day or the 10-week moving average. So very interesting there. Now VMware is a little bit of a conundrum, simply because I've been wanting to use that word for a while. Simply because you have the gap up, but it doesn't hold the low, and it breaks down, and you're getting very weak volume coming back up. So this is kind of wedging. To me, the gap up by buying this stock on the basis of the viable gap up is pretty much out the window. Now what you're looking at is whether it builds a constructive flag, and it's still working on that as far as I can tell. You can see here on the weekly chart, nice move to the upside. Here's your breakout, but you do basically come straight up off the bottom. So it makes sense that it would try and set up in a flag type of formation. Now notice last week here, let's make it a little bigger. You notice how you closed mid-range, so above mid-range. So that's actually a little constructive. You're not seeing heavy volume, so it wasn't like you got support. But it may just drift in and may need to form a handle in here, okay? So this is definitely one to have on your watch list, because this could just turn out to be a cup with a handle. And as you're pulling down, 2 weeks down in the handle now, and then you get this 1 week, so far 1 day this week. So it's really not conclusive yet. But coming down 2 weeks in the handle, and volume is drying up. So you could say, from the perspective of looking at this as a cup with the handle, and a 2-week handle working now on the 3rd week, that potentially this could set up and go. So I'd watch for that. And also, if VMware was to get up, let's see, I think it actually, let's go way back, way back. It actually was above 100 way back in its heyday back in 2008, right after they came public. So getting up through 100 now, this would not be the first time it's ever been through 100. Okay, I would contrast that with Amazon, which is trying to get up through 200, and this is in fact the first time that Amazon has ever been able to get up through 200. So remember the Livermore rule from Reminiscences of a Stock Operator, where he talks about stocks that go through the century mark price area, like 100, 200, 300, that his experience was that a stock that makes it through one of these levels for the first time should actually move very strongly up through that 100, 200, 300 level and move quickly to the upside. Now you notice that Amazon really hasn't, but it could still. So it's only been a few days here if we look at the daily. So, but I would just contrast that with VMware, which has previously been above the 100 area back in 2008. So it's not clear to me that that would invoke the century mark rule, the Livermore century mark rule, but it would be a cup with a handle formation that might be positive. And the breakout might be the thing that gets it rolling here. LVS is interesting because it is a dog now. Now, this is kind of an interesting situation, mainly because those of you who've been watching these webinars for a while, you remember when we were looking at this as a short, and it did actually work very well as a short. You had a climax top. Now, let's see, what I want you to do here is just real quickly, we were looking at Cena before, okay, and wondering, you know, is Cena... Briefing.com loves RAX today. They keep spewing about it. But see, is this a climax top? Well, to me, if you look at LVS, look at that move. Now, to me, that's a climax top. Okay, that's a huge climax top. And the stock builds a base and it breaks down. Very similar to Qualcomm in 2000. The only difference between this and Qualcomm in 2000 is that Qualcomm continued through its 200-day moving average, just went lower. Las Vegas Sands rallied from the 200-day moving average and actually flashed a pocket pivot here. So one of the problems though with this is it's not the most constructive position because you've got a lot of overhead from over here, so it doesn't really work. Earnings come out, the stock breaks down, and now guess what? It's gone from a buy here to now a potential late-stage failed base because you're trying to come out here on a trend line breakout, not really working, breaks down on earnings, rallies back above the 50-day, which is the blue line, but as some of you who've been listening to these webinars for a while know, one of my secrets is using the 65-day exponential moving average in lieu of the 50-day, simply because I've observed that oftentimes stocks will break below the 50-day and then kind of drift back above, and I think that's because they take advantage of the fact that so many people use the 50-day as a stop, so it may trigger a lot of stops here and send it back to the upside in the near term. But notice how you're seeing the tails, in other words, the long upper ranges here where LVS is trying to go higher. And it's actually resting right on top of the 15 moving average. I might look for this to break down further. This might be shortable right here. This is actually not a bad position, mainly because it's just coming off near its highs. You know, it's trying to come out of space. It's breaking down. And if the market started to break down and you saw the NASDAQ break through the 2,800 level, the S&P come down further as well, then they might drag this down, and this might finally break hard and eventually get through these lows down here, at least through the 200-day in the near term, and then eventually head for these lows. So LVS right now looks like a short to me. Wynn Resorts. Now, of course, Dr. K and I will be able to do some hands-on research starting tomorrow because tomorrow at this time we will actually be heading to Las Vegas for the 2011 Money Show at Caesars Palace. We're not staying at Caesars Palace, mainly because it's probably going to be a madhouse. There's 8,000 people supposedly going to be there, which is considerably bigger than the Traders Expo that we went to in New York in February. Of course, it was freezing cold in New York back then, and Las Vegas will be in the balmy 80s. So we're actually looking forward to that. We present on Wednesday morning at, I believe it's 8:30. Or I'm sorry, 11:30 to 12:15, and then again on Thursday morning at 7:45 to 8:30. So we have two presentations, one on Bible gap ups and one on the whole concept of market context, which I was talking about a little bit earlier with F5 and using market context to short stocks. Okay, so Wynn is actually holding up okay. Notice how it doesn't really tend to follow the 50-day and it doesn't really tend to follow the 10-day. What it does tend to follow, surprisingly enough, is the black line is my 65-day exponential. So maybe you use that as your selling guide for the stock. So it's actually moved up pretty well. But you know, Dr. K and I will get a chance to check out what's happening at some of these resorts, Las Vegas Sands and Wynn Resorts in Vegas. And of course, we'll be checking out as many of them as we can while we're there, and hopefully some of you are going to be able to make it. So some of the metals, you know, Freeport-McMoRan's building a base, so it's holding the 200-day moving average, but there's a lot of weakness in these patterns, and it would seem to me that at best, when you're looking at the weeklies, you see some pretty good selling. We probably need some time to build a base. Cliffs Natural Resources broke down through its 50-day moving average and the 65-day exponential, which you'll notice it also tends to find support at roughly, much better than the 50-day. Found support here, not quite here, but close enough. And then here, you definitely found support along the 65-day exponential here and down in here. Now it's trying to rally back above it. Maybe it needs time to build a base. So I would not necessarily try and short this, but I also wouldn't be buying Cliffs Natural Resources right now. So thank you. The SQQQ is 3 times, so glad we have a lot of smart people out there. You know, I just buy the things. I don't know what the hell it does. Lyondell, Basel, the stock was acting real nice, and now it's pulled all the way back to the 50-day moving average. That has served as a support line for the stock. So my take on this would be, you want to, if it breaks the 50-day and violates it, then it's probably done. I do think it's somewhat disappointing that you were in this nice uptrend channel and then it comes out and it doesn't get any acceleration. So, Dr. K, I hear you.
Yep, my sister
You're
did
back,
system
risen
pack
from the
upgrade.
dead.
We did a system pack upgrade, and it took horribly long, but it has to be done. And apparently, what it did was it pretty much killed my drivers. Isn't that nice of Microsoft?
Well, we're happy that you're here, even with your lousy Beverly Hills internet service. But how is the
That too.
presentation? What's that?
There's that too, but actually, you're coming in loud and clear. So right for now, the internet's working, but the drivers weren't. But I pinpointed the problem, so now I'm back in good form.
Very good. So let's see. Somebody mentioning SLW came out with some nice earnings after hours, but it doesn't look like the stock is doing anything. I'm showing it up a dime still on the bid, so I don't know if they're going to open it up. It's already opened up. No, I would not buy SLW. I would not touch any of these things. They're not in position here. Dr. K, did you want to go back and look at the market and comment on the market direction model?
Sure. Actually, we had a couple questions. I'm going to pull up my my question sheet here, so I can answer them more specifically.
You're only 50 minutes late, by the way.
Yeah, that's pretty good for bad drivers. Let's see. Yeah, I hate it. God, drivers have been a nightmare in the past. Anyway, at least this wasn't too bad. So yeah, there was a comment made about. Well, did you already answer the silver issue about buying silver now or waiting?
Yeah, you don't want to be buying silver now at all
Right.
because
Leave it
it's just
alone.
not. And the other thing is that I was pointing out, Dr. K, is that I think some of the greed that was in this whole move is still out there because I get more questions about whether I should I buy silver now? Is silver a buy here? Please tell me when silver is a buy. And so nobody's really running away from it yet. See, the whole greed of having watched a big move, and this is so classic, is that and this is what you guys don't want to have. You don't want to have a retail mentality, okay? When I was at O'Neill, that's what we used to joke about. So even some institutional investors have a retail mentality, and a retail mentality is you never bought this and you watch it go straight up, and finally when it breaks and gets blown to smithereens, now you got to get back in because it's cheap, but you don't realize that all the momentum is out of this thing now, and it needs time to set up, right, Dr. K?
Which is why we had that anemic rally from I think it was May, June, July, August of the year 2000, when everyone wanted to get in cheap after the market had a big bursting of its bubble.
Exactly, back then after the big internet bubble. But one thing we should note, though, is that there was this pocket pivot day here off the 10-day, but that's a continuation pocket pivot. That's not an initial entry point, unless you're going to be an aggressive player and keep a very strong or very tight stop on it. But notice 3 days later, it closes below the 10-day moving average, which was the moving average that this continuation pocket pivot was based on. As soon as you move below the low of this day here, then you got to be out of there. And we actually did buy a little position, a 10% position in the SLV, and once it started to violate the 10-day, we were gone. So the damage there was very, very minimal. And after we were up some huge amount from being long the AGQ, it really didn't matter. So that's why we sit in cash. Go ahead, Dr. K.
Some commentary or questions on how we played SLV, or rather AGQ more specifically. So I'll just I've mentioned this a couple times, but I'll encapsulate it right here. The essence of AGQ was SLV. So as long as SLV was acting right, that is not violating its 10-day moving average, and you'll notice that it respected its 10-day since it began its move in early February. Pyramiding AGQ was no issue. In other words, dollar cost averaging up, not down. We also kept a close eye on gold, which was acting properly through silver's entire move. We sold silver pre-market April 25th when it gapped up on news out of China that they're going to set up a fund allowing them to stockpile more silver. And then after that pre-market instance, we then bought back into the silver on the pocket pivot day on April 27th, but it was a very small position compared to how much we were holding into the topping action that silver set up. So once we bought a small position on April 27th, we had no idea if it was going to just keep going or it was just going to really blow up. And since it had a violation of the 10-day moving average for the first time since February, that was where we decided to sell the small position.
So it's pretty simple then, or you could just use the Gill method, and that is just put your whole account into AGQ right here as it breaks out, and then try to go to sleep, and then sell right into the peak, right? That's easier said than done. But there was a way to average up into it, which we did pretty consistently and methodically, and we were able to score a big gain in April. And for the most part, when you're up 40-some% for the year, and it's only the end of April, what do you really need to do? We can relax and take our time. And one thing I would notice when I go back and look at my trading, and one of the things that really killed me trying to run a hedge fund, and you run a hedge fund, you got a bunch of investors who are always hassling you and wondering why you didn't do this and why you didn't do that, and why you're up when the market's down or why you're down when, well, they never complain if you were up and the market was down, like I was in 2008. But when you're down and the market's up, they're complaining, and there's always a lot of expectation, and so you're always in a position of thinking that you have to do something because people focus on monthly performance, and that's really kind of silly. And what it does, it gets you in a frame of mind where you think you have to be in the market all the time. But the reality is, when I look back at successful periods, it's really been more a matter of waiting for the proper window of opportunity to show up and then moving in at the right time. So, the window of opportunity that we saw and we capitalized on, it's really all we needed for the entire year so far. It was the silver window opening right here when you saw silver and it's all the ETFs associated with silver break out, and that was it. So meanwhile, the stocks are kind of uneven, with the stocks running up, stocks running down, breaking out, and then failing, and all kinds of funky things. This is one of the most even trends we've seen since the gold trend in 2009, right, Dr. King? Probably.
Yeah, that's about right.
Yeah. So it's very simple, and so right now what we're focused on. And, of course, we want to keep all of you in the loop and all the members on Virtue of Selfish Investing in the loop on this, is when do we see the next window of opportunity open? And when we do, we'll be pretty as forthright about it as we can at the time, but they'll be there. And right now, I don't think you're seeing a lot of really optimal windows of opportunity that you want to be messing with. So, Dr. K, did you have anything on the indexes here? I'm assuming you can see my screen.
I wanted to mention the question was why did the model switch to a sell instead of to a cash signal? And the model works on a variety of levels. Price volume action is the main one. Price volume action of the indices and leading stocks. And with we had a lot of damage done to leading stocks over the last week, and that level was enough to put the model into a sell signal rather than just a cash signal. Now, obviously, QE is a valiant force to be reckoned with. Therefore, there were periods such as in the first half of April where the model would normally have gone to a sell signal but didn't. It remained in its buy signal. In fact, it didn't even go to a cash signal simply because the QE effect was still quite powerful, and it still is very powerful. But the model is weighing a number of variables, and given what happened over the last week, the damage done was enough to outweigh the QE effect. So the model is still on a sell signal until further notice.
And you might, would you expect then that we're going to see the market move lower from here on the basis of the sell signal, or do you think it'll be negated first, or are we just trying to guess?
Well, as everyone can see from the tables, there are, in practice, there's more false signals than true signals. And this can even be during good market years, or I should say easy market years. In other words, the model thrives when it hits a true signal, because then the percentage gained on that true signal more than outweighs the tiny little losses from the false signals. So in other words, when the model has a buy signal or sell signal, I would say it's impossible to know whether that signal is going to be true or false. All I know is that on a true signal, as if the market were to come off here fairly appreciably, that would certainly register that as a true signal, which would more than make up for the tiny little losses made along the way. And that's how, if you look at those tables that we have on Virtue of Selfish Investing, you'll notice that there's some pretty substantial double-digit gains that the model has had on true signals, but there's also these tiny little losses, generally kept to within 2% on the NASDAQ composite when the model is false. Now that, of course, will translate to typically 3 times that amount on a 3 times ETF. So if you look at TNA, for example, you'll notice that there are, in some cases, there's some double-digit, 10%. You can have a 10% loss in TNA if the Nasdaq Composite was off, say, 3% on a false signal. Generally, those losses are contained to within less that amount, simply because, given the amount of volatility we're seeing in the market most of the time, it allows the fail-safe to kick in within a 2% loss on the Nasdaq, which, in other words, would be within 6% loss on a 3 times ETF. I wanted to make one more point, because some questions have come up, peak to trough drawdowns in these 3 times ETFs. That is certainly an issue if you're buying late into the signal. So in other words, if the model issued a signal and now the market's been trending for 3 weeks and you're buying there, I mean, you could potentially be buying at a market top, and therefore if the Nasdaq were to come off, say, 5% or 6% from that level, you could be looking at easily an 18% loss by buying into a 3 times ETF late. So my advice is not to be buying late into these signals. And if you do, know how late you're buying into the signal, and always keep yourself stops set so you're not going against your risk tolerance levels.
Yeah, and I would point out, I was talking about doing SQQQ. Sorry, I keep knocking my microphone over there. But with the market coming in, the SQQQ down today a little bit, coming in and just taking a small position here, and starting to build a position as you get this kind of a bounce. Now, if the market keeps rallying, I'm not going to be 100% in the SQQQ. Right now, I'm probably in 20% at most, which is really 40% exposure to the market on a one-to-one basis. So, I'm sorry, 60% exposure on a one-to-one basis. So if the market rallies 1%, it's not going to knock me that badly. It'll only be 0.6%, even though I'm in a 3x SQQQ ETF. And the way I would do it is just build into the position. So right off the bat, you don't want to put your whole account into a 3x or 3 times leverage ETF on the model signal, on a sell signal. So, anyways, somebody's asking us, does your secret sauce include future Fed tightening moves? No. The market will tell you when all that becomes relevant. So you want to watch the market first, and forget about what you think the Fed is or isn't going to do. Now, one thing you might notice, though, is that bonds have been rallying, and if you're trying to short bonds, I'd forget it. I mean, if anybody who's owning this thing, once this thing was not able to hold any of these support levels, either the 200-day or the 50-day up here, there's no way that you're going to be trying to sit with this, because it looks for now that the bond market is trying to rally, and the dollar is doing the same thing at the same time. So not really high probability there. But what is this telling you? It doesn't really. If the dollar is rallying, that would seem to tell you that the Fed is going to tighten. But if the bond market is rallying, Dr. K, how do you read this? You got a rally in bonds and a rally in the dollar, telling you that the Fed is going to tighten? Yeah, we may have lost Dr. K.
Yes, here, I got you. I just heard the last bit there. You have a dollar that's rallying, and I think it's a short-term rally. It's just a bounce. It's probably a result of the Fed manipulations, and we all know that when central banks try to support their currency, they usually lose if the fundamentals aren't in place for higher currency. And the fundamentals are still as bad as they've been. And so my guess is that the dollar is going to continue its long-term downtrend. I don't see any reason why it shouldn't. Now, the federal funds futures is it's worthwhile looking at that, because what they're saying is the Fed, they expect the Fed to hike the interest rate by 25 basis points early in 2012. That's where they stand right now, based on everything that is out there, all the knowledge that's out there. That sounds reasonable. I wouldn't be surprised if the Fed starts to hike around that period. I would be surprised if they started hiking any sooner, just simply because they don't want to derail what is an incredibly fragile and almost fictitious economic recovery.
Fictitious,
So I
I
think the
like
Fed's going
that.
to stay pat. They're going to stay pat, and they're going to find other ways to get to monetize the debt because they don't want to default. So they're going to continue to devalue the dollar.
One thing we would note, people ask about the ZSL, which is the inverse silver ETF. We wouldn't be buying this. You don't want to be buying this. You don't know. Silver may just bounce along the lows here, which means it's not a buy, but it doesn't mean it's going to 20. So, and a sharp rally back over 40 would get you pretty good. So we would just leave silver alone. Let it go. And my view is that silver will bottom and form a new base and consolidation, break out when nobody's looking at it. Nobody cares about it because everybody began to care about it way too much. So real quickly, some stocks. Weight Watchers, what is there to think about that? Low volume rally. Well, actually, that's not true here. Let's go here. I'm going to use that chart. You got a volume rally. This is not a pocket pivot, so it's really not a viable move. So, this is kind of driving nuts. But the stock did have a big run up, and it pulls back down to the 50-day and bounces off of it. That's about it. So if you're going to try and sit through that, and you have a low cost basis, maybe you could have, but it would have been difficult. You do notice though that it closes mid-range here on this particular day. So, some of the other stocks we've been looking at, Acme Packet. I call this a migraine stock, breaks out, comes back in here, and then breaks all the way down. So you can try and buy here, you're getting a wedging rally. You're seeing this kind of action in a lot of stocks. And a lot of stocks that got hit, a lot of the leaders that got hit, for example, you saw Lulu broke down. You're not seeing much volume coming on the upside, which isn't necessarily a bad thing, but it tells you there isn't a lot of strength, so it doesn't seem to indicate that you're going to see these things blown out to new highs. I think that's going to depend on the market. So really with the market right now, Dr. K, you there?
Yeah, I am.
What would you need to go to a buy signal on the market? So what would change this from this sort of trendless, go nowhere type of environment to where you would have a buy signal that's telling you if a bold new bull rally starting from here?
Well, generally, I would look for a proper follow-through day. In other words, either the Nasdaq Composite or the S&P 500 meeting the threshold level on higher volume on that particular day. That would be the first major criterion I'm looking for. But then I'm also looking at how the leaders are performing, and if they're not performing, even if we got a legitimate follow-through day, the model might still sit in as a sell signal or sit in cash.
Right.
In fact, it may very well actually in that kind of scenario where you get a valid follow-through day but not supporting leadership, the model would more probably be switching to a cash signal from its existing sell.
What was that?
House phone.
Okay, I like that. Okay, well that's pretty much it. You can see what we're looking at here. You don't need to be in silver. We're not really doing too much here. We're trying to play the sell signal. I am at least with a small SQQQ position. We'll see where we go with that. I'm going to be traveling tomorrow, so that'll be up to our trader, Bill Griffith, to be handling that position, assuming we keep it tomorrow morning when we hit the road. But for now, I think that the key here is to keep your powder dry. I don't think you want to be moving aggressively into the market on the buy side, particularly since we have a sell signal on the model right now. You want to be laying back and waiting for the next window of opportunity to open up and open up wide. There's some stocks like this Avago, AVGO. Let's get over here to a chart. Coming out today, not huge volume. This is a pocket pivot volume signature, but you're extended from the 10-day. It's a breakout. Would you buy this one, Dr. K?
Not in this environment. If we were back in the 90s, I probably would, but as many people know, in this decade, a lot of breakouts don't work, especially when they're extended above the 10-day, and so there's too much risk in this environment.
Yeah, and so we think it's as important. What we tell you, what we don't tell you, is as important as what we tell you. So if we're not telling you, some people will note, oh, you're relatively quiet now with respect to pocket pivots or viable gaps, and that's true, we are, because we don't really see that there are any high probability setups. So when we're quiet and you're not hearing too much from us, that in itself is information that you can use, because what it's telling you is that we're not seeing anything that looks like a high probability setup here, and so we will be quiet. And oftentimes it's the things that you don't do that save you more money than the money you might make by doing things, or when you might end up actually losing money. So sometimes your most profitable course of action is to do nothing or to do very little, or to sit on your haunches. The portfolio simulator, as I was telling you earlier, tries to mimic. In a lot of ways, we're kind of having a little bit of fun with it too, to create this character who's some guy who has a day job. And right now he's long a 12.5% position in AutoZone, which was bought in here, and it's slowly moving higher, but it's not like it's heavy exposure, and it's hanging in there. And Oracle, which is still holding up above its breakout level, I would say somewhere between 33 and 34, 33.71 if you want to use this peak here on the left side, but it's hanging in there. So the portfolio simulator is 37.5% invested in the market in 2 stocks, one of which is a huge large cap cloud computing play, and the other one is a auto parts and whatever maintenance. I also noticed Pep Boys is also that's not it actually. I think it's anybody know the symbol for Pep Boys? Somebody want to type it in for me?
No, this. Hold on a second. Try no.
Why? Pep Boys. There it is. Pep Boys is acting okay too, So what happens in a lousy economy? People need they're going to maintain their cars on their own. So so the portfolio simulator, those are the 2 positions it has. Not doing anything with them yet because you watch your stocks. If you own stocks right now, even if the model is on a sell signal, watch your stocks. Are they violating a key moving average, either the 10-day if they show a tendency to hold the 10-day, or the 50-day if they show a tendency to hold the 50-day. So you watch your stocks. The portfolio simulator will be doing that with his stocks, and that's about all he's going to be buying right now, because we just don't see anything right now that is in an optimal position. We do not see a window of opportunity opening here. But when we do, and when the next one shows up, we will see it. You'll hear from us. Other than that, I think that's about all we have for today. So anything else to add, Dr. K?
No, I think that pretty much wraps it up.
All right, everybody. Thanks for listening. If you have any questions, please feel free to email us. You know where you can reach us. All right, take care, everybody. Have a good time. We hope to see some of you in Las Vegas at the Money Show at Caesars Palace over the next couple of days. All right, everybody, take care.